Good morning, traders. It is Thursday, the 9th of June, 2022. This is episode number 2250. Thanks for joining me. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Again, amazing 2250th episode happens to fall on the day of the U.S. index roll. So that's your alert at the top there. U.S. index roll begins this week, begins today. That's the official, but I want to emphasize here that that I will not be rolling to September as I normally would with the exchange. The reason being, the volatility is high and therefore the liquidity is low. And so I'm sticking with the old contract just to keep my volume profiles and so on in check or in line. So very strong potential that tomorrow morning I'll roll to September, and you'll see on the conversion trading pre-market summary sheet in front of you, you'll see that the ES, YM, NQRTY now show the M2, 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 and a June 2022. Just to be explicit that we're remaining on the June contract versus moving to September. I want to also remind you that, quad witching is no longer quad witching, it's triple witching, because single stock futures don't exist anymore. But the 17th is expiration on the June contract. You really should be at the latest trading or rolling to September by Monday or Sunday night session. I would not stay longer, and we'll monitor the pace of the roll every day to see when we can resume using tools, order flow and other tools, and when the impact of people selling or buying the old contract and selling or buying the new contract to move their position or to do a calendar spread roll, when that effect will go away, which will help us resume our ability to use order flow in a clean way. Because right now, a lot of people are having to buy or sell one futures contract in order to buy or sell the next. So if I'm long, if my position is long ES or NQ, I'm going to have to sell June and buy September to keep that position, and I need that spread to remain neutral. Here's the spread ratios or the spread premium. I'll show you the one posted by Convergent Trading. Here it is. These are the spread premiums. For the first time in a while, we've got a positive premium difference between the September and the June, between 1 month and the next, because interest rates have been incredibly low. They've been negative for a while, but here we have a difference of 2 points. So if you're in September already and I'm in June, just add 2 points so you know what it is, what I'm talking about. September, NQ, 30 and a quarter point difference. YM's 25 point discount in the September versus June. EMD, which most of you don't trade, it has a discount of $1.30, and the Russell has a premium of 40 cents. Futures contracts should have a premium if they are normal. If they don't, it's called backwardation. The future should not technically be cheaper than the present, right? So those are just take note of that. You can go to Convergent Trading or EdgeClear's Twitter and grab that chart so you can make your adjustments accordingly. Other than that, really mild risk-off sentiment. The Euro Stoxx 50 and the DAX taking a bit of a hit as a result of the ECB announcement. The ECB did not make changes to its position today. It kept the interest rate, the ECB interest rate at 0%. It kept the deposit facility rate at negative 0.5 or negative 50 basis points. However, they did indicate that starting in July, they'll start with a 25 basis point hike which ends an 8-year cycle of 0% interest. The EU also forecasts GDP to be less for this year and next than the prior forecast. So there's a bit of a negative tilt across the board. I want to remind you that tomorrow's CPI, very key. Tomorrow is the CPI release, so pay attention to that. For the rest of the day, we did have initial claims in the U.S. Came in at 229,000, a little bit worse than the 205,000 expected. The next big number is really the inflation rate out of China. Year on year for May, expected at 2%. If you're trading at 9:30 p.m. Eastern U.S. time, you will want to pay attention to that release. Turning our attention to the S&P. The S&P, it says balanced. It is not balanced. Let me fix that real quick. It's in a multi-distribution. There we go. Quick on-the-fly repair. It's a multi-distribution profile this morning. It's got 3 distributions on the profile in the S&P. And what does that tell us? Let's see if you guys have picked up what I've been talking about for years. What does that mean when we have a multi-distribution auction condition overnight? Again, mild risk off. The inventory is 19% short. 259,000 contracts have traded. I am broadcasting in 1080p, should be crystal clear and sharp to you. If it's not, then and you're on YouTube, go to the little cog at the bottom right in the settings and switch it to 1080. And the reason it doesn't do that is because potentially your bandwidth can't support it automatically, so YouTube's not engaging it automatically. But it should be crystal clear in 1080 HD. 260,000 contracts traded in the S&P, so it's relatively active, much higher than the mode of 170,000. 47.25 points. Yes, a multi-distribution profile means that there is price discovery going on, that the market is actively challenging various price zones and rejecting them in its effort to find balance. That's its job, is to find balance. Which tells us what? It tells us that when we come into the day session here, we are likely to see some of that action roll over into the day session. So we're expecting today to be another day of a fair amount of activity. Let's take a look at what the market has done here. Let me just, sorry, I'm fiddling around with my charts this morning a lot, and therefore things are not prepared as they should be. Poor form on my part. Just reloading data here for a second. Okay, so let's take a look at where we are. On Edge Pro X here, this is where we've been since the 28th or something, 27th. We've been in this box. And this box, I'm sure of you by now, hate having me tell you again and again that this box goes from really 68. Yes, there have been some pokes above to 76, 75 and 89, I think, overnight. But 68 to 71, 72. That's the box. And we've filled in the gap that was back here down into 71, and we've challenged this low down to 77, and we've challenged a high multiple times. Every time we challenge a high, we fall back in, and we fall back in pretty aggressively. Yesterday was an inside day to the prior session, higher high, lower high, higher low. With the value areas, you can see the blue area is kind of overlapping. This is a coiling market, and it is very likely, when it breaks out of here, it's very likely to go quite a distance. So be prepared. Be prepared. What's that from? Lion King? Yes, I have kids. So we are smack dab on top of this heavy volume area, and we are really just waiting for the market to reprice, and it's not doing so. So CPI may get this done magically tomorrow. We are in the middle of of summer trading right now, and things are a little bit wacky. Now let's layer in expiration, roll and expiration, and I tell you, and I repeat this every expiration. This is the week that I would normally take off. I would either spend expiration week, quad witching or triple witching week, which is next week. I either spend it doing things like taxes or just doing business stuff, trading stuff, working on studies, working on something trading related, or I take the time off. I have a negative skew over the last, how long have I been in futures? How long have I been in futures? 19 years, 20 years maybe. In that period, I've never had a positive skew in my results, my trading results, the week of expiration. And so it's a time when I just back off of the market. Maybe it's a self-fulfilling prophecy, but I feel like with these volumes coming in and out and the roll and everything else, it just isn't worth it for me to participate. So I'd love to see this thing kind of explode out of here by tomorrow. So let's extend this box out. We're still inside of this box I put up yesterday. So you can see we pushed there, pull, 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 we push, push. We tried to push and fell back in. Pretty strong trend down. Tried to push, fell back in. Pretty strong trend down. Tried to push, pretty strong trend down. Tried to push and sat sideways. Okay, so that's the same box I drew yesterday, and we are right smack dab in the middle of it today. Be aware that 41.17, 41.20 area is the middle of this thing, and we're trading at 40.96 currently. We're trading down here. We have a negative skew this morning coming in. This looks an awful lot like the day before yesterday. In terms of where we're opening, it just looks like it's likely to retest that 77 area this morning. That's what I'm looking for, and that's it. There's not much else to say. Here's your relative delta based on MBO data on Rhythmic. This is showing when I see the small, large, very large below the zero line for the session. This really carries forward. If I see that, large is above, small is below, very large is sitting in the middle in terms of relative delta, you're looking pretty choppy. But this, I'm looking for short opportunities on the open, looking for it to most likely drive down into 40.77. Or so. 40.76 is the number we're looking for down below as the last area tested 2 days ago or a day ago or something. So that's what I'm looking for this morning. I'm looking for this to continue to flow to the short side. It really had a hard time holding on to the upper prices yesterday and in today's overnight session. Okay, so that's how it looks. The heat map, we're seeing a lot of size already coming across. So you can see there's quite a bit of size trading a lot of these big bubbles, these big dots. This is kind of an ideal setup. Talking about setups, this is kind of an ideal setup. It comes down, test, knocks, and then we get this accelerated push that knocks it again. And then once it breaks, we look for the short on the pullback to that area for a continuation. So you could see that occurred here and here. In case you missed it the first time, this is a nice little scalp setup into the low. For those, I only allow about a 1.5 to 2 point stop, looking for a 2R return in the aggregate. So I got to get at least 3 points on the trade. So 97 to 94 already done. Right? There's a nice little scalp setup there. Looking at the order flow screen, I'm watching these pink numbers and the green numbers, not so much the white numbers, and I want to see what the imbalance is. And you can see there's heavy imbalance on this push through the 97. So this is why this would trigger the trade on a pullback. I'm seeing heavy imbalance, pretty good delta right there. Heavy imbalance to the short side, so look short, look for it to pull back to the prior low and the low from back here, the two lows from back here. Look for it to pull back to there. For the short, look to peel off 3 points, risk about 1.5 to 2 points or so. And then if it continues to run, it continues to run. Unfortunately, I do not trade pre-market unless there's a major figure like non-farm payrolls or tomorrow's CPI. So those are those are pretty decent setups. Again, the way I look at the footprint is I'm paying attention to where the market has traded and where the imbalances are. So you can see it's starting to form these little imbalances to the buy side. Doesn't really mean much. This is not very aggressive buying on the pullback, so the skew is still to the short side on a very short-term basis. Anyway, getting into some details there that maybe I don't need to, but you could see where, the sellers are pretty dominant here, right? So negative rotations much bigger than the positive rotations. So you could see the negative rotations are really dominating. Earlier positive rotations not dominating with some buying. You get this cluster of buying at the peak. As it moves down, there's a risk that this could be the end of the selling, but we could see that the pullback was very poor. And then once it rolls over, we have a continuation trade, and we look to catch that continuation trade. So this is the same down here. This is likely to continue to push lower. The caveat is that we're opening. As far as today, as far as what we're looking for today, what's going on today? All right. So what do we have for today? Actually, let me do it on this expectation chart. Let's keep things consistent, huh? Consistency and process are the key element of success in trading, in my opinion. All right, so here's our chart. Primary scenario, expecting this thing to be, what are we at in terms of, where are we at in terms of 23%? 23% imbalance, not much to speak of. So 23%. Really not expecting much of a push. This is very likely to run into a problem as it pulls back to yesterday's low, which is 41.05. If you recall, 41.05, 41.07. So let's put something here, 07, 05. Okay, that's kind of an early line in the sand. Expecting it to push back there, expecting it to fail, expecting it to take out the overnight low for the overnight stat at 40.92. And expecting it to challenge the 76.77 area. And again, pay attention to what it does at the 71.72. I'm going to be cautious here because it has come here and bounced every time. But as long, if it breaks lower, I don't see why it would today, but who knows? A pullback to the overnight low here sets up a short. Looking for it to break the weekly low at 71.50, and this is expected to be quite a fast drop into 40.47 again. 40.47 is target, and we're looking to enter it in the 92 area. Okay, so that's the key trade of the day. Given the skew, it might bounce, so don't rely on that. Otherwise, push the low, test around 72.73, get an impulse higher, brings us back to the overnight point of control, gives us that stat, gives us the the gap to settle stat, the settlement test, which is right at 41.17-ish. Settlements at 41.14 gives us the settlement right here, and then we start to challenge yesterday's low volume node here right into the 41.35 before it stalls. So we end up with a lower high, lower low showing weakness, but it's not able to break through. In either case, this is really a day to pay attention to what's going on because we're really close to that 71 to 72 area. And if it breaks through, man, there's going to be a lot of, there are probably going to be a lot of stops, at least initially. Do not commit, do not overcommit to a trade. And remember, you can be the perfect trader. You can have a 99% win rate, but if your risk factor is upside down, there is no future in it. So it's much better to wait for trades that give you a good risk factor, much better than having a high win percent or having the best scalping methodology or whatever. None of that measures up to the idea that every time you risk $1, you should be making at least a couple or $3 in return. This is what makes this sustainable for professionals. Okay, so trade as a professional. Good luck today, and I'll catch you tomorrow morning. Take care.